guys and gals, let's go over this. We just had a beautiful sell on crude oil. You traders caught the first one, and some of you traders caught the second sell. I got the sells marked up over here. Let me show you how my traders got into this short at this high and this short at this high. Okay? What we do is we use this. This is called a market profile chart over here. Okay? I have two market profiles, more price and volume based on this black chart. Okay? Price profile has been around since 1985. Volume profile has been around since 1994. I use this on the black chart. Volume based profile is right here at this solid blue line as a control point. Solid green line is low value area, volume profile, solid red line, volume profile up here at the high. Then I have my red dotted lines, which is more price based. You got your red high value, low value in the green. So anything red is called high value, anything green is called low value. If you go all the way to the right where my Fibonacci dots are, my blue Fibonacci, red Fibonacci dots where we sold. All right, I got low value in green and high value in red. I do not have the control point. I only have that on my black chart. And then if you look at the middle chart, I have more long-term values, high value red, control point, and then low value green. So it's green, low value, control point, blue, high value is red. How do we get these trades to work? Why did traders take these short? Okay, what we do is we use these charts to find where profile stacks over top profile within a couple ticks. The first thing you do as a trader is you must know if the market's trending up, trending down, or sideways, meaning a chop market. The best way to do it, I have a built-in trend filter for any market that's built into this chart. These templates are already pre-made if you want them on your own Ninja chart. If this moving averages to me, like I said, are worthless, but they're great for trend direction. If it's angled down, then we are looking to sell retracements. It's angled down. Smaller moving averages cross down with spread, which gives us good trend direction. So that's the first order of business, is you got to ask yourself, am I trending up, down, or sideways? If it's angled down, we're only selling retracements. Once you know your bias, which the bias is down, my traders recognize the bias is down. They want to find where the stack levels are to sell retracements into. So if I'm looking at this chart, I want to look at where is my control point, my solid control point blue, my solid red line, solid green line. Where do they overlap each other? If you look on this 3 times stacked area, they overlap. Now check this out. Look how my solid control point was at 50.82. My dotted price point, my solid volume is at 82. My solid price is at 81. Now jump over here to my white chart. At the time, right now, at this level, it was 78. My green low value. So I had 78 here on my J signal chart at low value. I had 80 right here at my price, and my volume was 81. So 78 to 81, I had 3 times stack level of resistance. And that's the beauty of this system. Market profile has worked by itself for 31 years, just by 1 time stack level. In other words, there'll be days where volume profile by itself will stop the market to the exact tick on any given market without price, without developing over here on the white chart. There'll be days where static profile will stop it to the exact tick. Some days they'll stop it right to the exact tick. Same with developing over here.
You've got mail.
What I'm trying to do is I'm trying to see where value stacks over top value. And that's a unique thing about this trading plan. I'm using profile that overlaps profile to find big, strong moves in the market. So I know I'm in a downtrend. The beautiful thing about these solid lines is they will adjust during the day and find value. At the time of this short, we had the control point up at this level also. It was right there. So in between this level, let me get this off, we had a stacked level. We had 2 times stacked. I had the control point right here on a retracement. The market broke down through the control. It broke down through the control right here. It retested. The market came back up and retested. The control point did not move. It retested this area right up here. This is a sell area. It was a control point at the time. This was a sell area right there. So I had LVA that broke and was being retested within 2 ticks. I already retested a control point, which is allowed to break as long as I get a negative market delta. So I had 2 times stacked area at that level. Now let me show you what happened to market delta at the time. Now I want market delta to turn negative, and I want an order imbalance. I want it to turn red, close red. At that price point in time, when it retraced at 2 times stack level, I had a negative 301, and this is where a lot of the traders that posted in the room got short. They got short the market right at this high. My members who got short, they recognized that it was a 2 times stack level. I mentioned this control point as a launching point for the market every single day. We had an $800 trade potential on gold for the same exact setup this morning. Hit the control, hit the LVA, 2 times stack, tanked. Same thing here, same trade on crude. It was LVA in the control point. Control point at the time was right there before it adjusted here, and I'll show you that trade. And then I had negative market delta. Then what happens? Market takes a big tank, right? Flushes out. Boom, all the way down. That's negative market delta all the way down here. Then it retraces back up. You can see positive market delta retraces back up. What happens at the control point? Comes all the way down. Boom, adjust. Now the control point adjusts, and I'm sitting at 50.81 at the control point. That's where it sits right now. It has not moved. It has not, that control point has not moved at all. It has not moved since 9:10. Right now, it is sitting at 9:47. That control point has not moved an inch. Okay? So what happens is it locked itself in right there. The market locked itself in, and then I looked at the confluence. Look where the confluence was at the time. The market's retracing back up. Control point comes down. I got the volume profile sitting at 81. My price is sitting at 81. And check out my beautiful developing profile. Look at this guy right here on the white chart. It's sitting at 78. It broke down through and retested with the J signal as a natural sell anyway with negative market delta. But look how I'm sitting right at the 3 times stack level. You're not going to get a better trade in the market like this. So what do? Does it turn negative market delta? You betcha. Negative market delta right at the high. There's my negative market delta. Look at that trade setup. It is an absolutely gorgeous trade. The fill was 73. Over $400 trade potential with $120 risk per 1 contract. And it's still not done. Now, the beautiful thing about it is, guys and gals, is that we use the stack levels, and once we find the stack levels, we use market delta. Remember, these charts feed each other. Now, what I do have a chart I added to the room, which members get this on your own charts anyway. I got long-term sim value right here. Long-term sim value. My target on this trade, when it's at 80, I said was 40. So you knew your long-term target was 40. Sure enough, came down to 40. It hit our target. You enter at the market delta close and open it up at the next bar. Here's how you enter market delta. Great question. You enter at the market delta close. You have a hard catastrophic stop of 15 ticks. As soon as you enter that order at the close of this red bar, you place your stop 2 ticks above that swing high to lower your stop from 15 ticks. If you get in the fill correctly, you should have an average stop of 12 ticks on the trade. You should have risked $120 per 1 contract on this $400 trade. We're trying to get a 4-to-1, 5-to-1, 6-to-1 average on our reward to risk in this trade room. Some days we'll get 10-to-1, 9-to-1, 8-to-1. Gold was an 8-to-1 this morning. It broke through low value, retested the control and low value, 2 times stack, negative market delta, $800 trade potential. So you're going to get those sometimes. But on average, we're trying to get 4 to 6-to-1. So what we're doing is we're using this chart over here that has 2 profiles on it. My solid lines are more volume based. My static lines, they don't move, or more. price-based, and then I use my J signal over here, my white line, which only has a high value and low value area for another additional confluence level. And that gives you stack levels. And then all I do is I let market delta pull me in. Now, when some traders get really good at this, they'll sell right into a 3 stack level right at the high, right when it's touching it. They'll sell right into it, right at 80, 81, and place your stop right above the swing. I got traders that do that. Long-term members in the room. But I would use market delta as a tool for you new traders until you get used to these stack levels and how this profile adjusts. But it is accurate as hell. It's crazy. Very accurate, because what it's doing, it's reacting, it's looking at the stack levels between 3 different indicators are meeting at the same price point in time. Do you realize how hard that is? You realize how hard it is for an indicator to meet 3 different types of indicators to meet at the exact same price point in time? It's almost literally impossible, but it happens all the time with profile. You're going to get 2 or 3 times stack levels all the time in the market. You take any other indicator and try to overlap them when they meet the same price point in time, very, very rare. Profile does it all the time. We're using profile to stack over top profile.